Hey everyone, for market minutes today, we're going to look at Meta stock. So I like to do three things. I like to look at their latest earnings. I like to look at their current valuation. And like to look at other elements to consider. So we'll start with their latest earnings. And this is interesting. This is in millions rather than thousands. So to have a revenue growth year over year of about 11 billion is really impressive. That's still pretty strong revenue growth. The cost of that revenue went up about that same amount. And then the marketing and sales it went up quite a bit, actually. This is about a 30-40% increase. So that's not great. But besides that, what's this? G&A also went up quite a bit. That's interesting. So the total costs went up almost, percentage-wise, the total costs went up more than the revenue did. Because 25 to 35 as opposed to 48 to 59, that's a bigger percent increase on those costs and expenses. So that's not great. And that's why, and you can see that in this line item right here, income from operations. This is a minor increase, very minor. And then we got their earnings per share did go up by a decent amount. I wonder if that's because of buybacks. That's what that makes me think of. Did Meta stock do buybacks in 2025? Oh. Okay, because this earnings per share is this is a pretty good improvement. Meta repurchased 26.2 billion in stock of 2025. Very aggressive. One of the largest buyback. But in 2025, they made zero. Interesting. And that's because, they're spending it on data centers. And then look at this. So sure, they did a lot of buybacks, but they also had a lot of stock-based pay. So that's interesting. Okay. So anyways, so that's kind of their latest earnings here. And then let's look at their balance sheet. And I have no doubt that this is very strong. Plenty of cash. Plenty of cash. Look at that, marketable securities on top of that. Then look at this, non-marketable equity investments. And then their property, PP&E. Yeah, so this is great. I'm going to bet, let's see how much debt they have. Long-term debt. That's a lot of debt, though. That debt offsets like half of their cash. So that's interesting. That's not a small amount of debt. That's something to keep in the statement of cash flows. So, all right. So that healthy company, but that latest earnings, it's not as like stellar as maybe you would think or you would expect. Because, when you see that the income from operations basically stayed the same. And then, I'm not worried about this debt, but it's worth noting that it's there. Not terrible. It's obviously not going to be terrible, but I wouldn't call this like amazing either. So if we look at their valuation now, they have a pretty low PE ratio when compared to Google or like Pinterest right here. And look, analysts love it. No surprise there. So this valuation isn't terrible. An 18 PE ratio. That's not terrible at all. They kind of have some of the competitors here. I just want to double check. Is Undervalued valued compared to its competition in terms of PE ratio. Not dramatically cheaper than its peers, but does look slightly undervalued. So yeah, so here's Meta. So ChatGPT is getting this wrong. It's saying its P ratio is 27, 28. That's not that's not what I'm seeing here. I'm seeing 18, and that's probably because the stock price has dropped quite a bit recently. I mean, the last month it dropped 20%, so that's probably where it's drawing it from. But like, look at Google, Amazon, and Apple. So, it is pretty cheap. Because it's saying that this is the P ratio, but that's not. And I'm gonna just double check on Moomoo to make sure that I'm not getting bad numbers and that ChatGPT is just a little outdated. Let's look here at Meta. Oh, I guess there's different P ratios that it's using. So there's the trailing 12 months it's showing is 22. But the forward P ratio is 17 here on Moomoo. So, and that seems to be what they're using here. Is they're using this the forward P ratio is 18 or 17.5. So they're just using the in the last fiscal year it's 22. That's what PELFY is, and then the trailing 12 months is 22. So ChatGPT might just be using a different PE ratio here, but it is so this is cheap when compared to its competition. So not terrible there. So with this valuation, I'm not. I think that's not terrible. And then other things to consider. I think the reason why this is down in the past 20% is there was like a big lawsuit. And I asked about that. Yeah. So here it says, recent court rulings are a major trigger. Juries found Meta liable for harm to users, especially minors. This opens the door to thousands of similar lawsuits. Investors worry this caused billions in forced product changes. So threatened that Meta's core business. Let's ask this. Tell me more about the recent lawsuits found Meta liable. Okay. California, of course. Jury found Meta legally liable for harming a young user's mental health. KGM versus Meta bellwether test case. Damages $6 million, which is nothing, but it's taking into account that this could happen more. Like if it happened once, then it could happen more. Meta had to pay that. Google had to pay about $2 million. It said Meta's product design itself was harmful. Addictive features, infinite scroll, algorithmic recommendations, autoplay videos, lack of warnings about mental health risks. Addiction, depression, body self-harm thoughts. Ooh, this is tricky. I won't get into my personal opinion about this suit case. I'm just going to stay focused on the stock. If this is true and if they found this guilty, then it's potential that this, like it said, could open the door to lots of more lawsuits, which could be bad. But that's what people are scared about with Meta. So that's something to consider, being compared to big tobacco. Well. Okay. Another jury in New Mexico. Look at this. Man has to pay $375 million. Holy cow. Holy cow. Failing to protect children of predator access, misleading news about safety. That's a different state. Mental issues are complex and not caused by one app. I agree with this. Their platform includes safety tools. I don't know what that means. They plan to appeal both rulings. So that would be something to watch if their appeal works. And then, yeah, this is true. Not about the money. It's about the similar lawsuits. So, yeah, that's interesting. There will be risk around that. So that's another thing to consider, kind of going forward on this one. Then my kind of final verdict on this. I mean, of the I'm not really a Magnificent Seven person. It's crazy how much money is in the It's like when you buy the SPY index, it's like you're buying the SPY with like a few other sprinklings of other 400, and you're buying the Magnificent Seven with the other 490 whatever companies kind of to the side. Like there's massive money in the Magnificent Seven. I'm not a big thing, but if I were into the Magnificent Seven, I would probably be most interested in Meta, though. Maybe Google. I think Google's not terrible either, but I think Meta probably be the most appealing to me. So yeah, if you're in this, I hope that it goes up. I hope that you make money, and I hope the best for you. This is, again, just all my opinion. Trust me, there are many things I do not know. But I love to look at this stuff. So, all right. Good luck, everyone out there.